Jim, what have you learned about the credit markets in the last 2 weeks of fun and games? What's a singular Jim Reid observation?
Well, I think, obviously, in the US, markets have very, very quickly priced rate cuts. I mean, we're pricing in over 3 rate cuts. It was nearly 4 last week in the US. I suppose the thing I've kind of have in the back of my mind is that over the last 10 years, the market has been very, very bad at pricing in the Fed. So I think, although I think the trade war gets worse, I think it's premature to price in that many Fed cuts at the moment.
Well, this is really important, folks. So, for example, Barclays yesterday, John Farrell mentioning with, I think, 2 rate cuts in July, a 50 basis point drop. What I see, Jim, is a lot of drama. People are forecasting or strategizing drama. Am I right on that? Is it a time where people are making big bets and they really could get cleaned on that?
Well, certainly in the front end of the rate markets, making big bets. I mean, I personally think we're quite late cycle in the US, but I don't think necessarily we're ready to roll over in the next few months. No one knows how the trade war is going to go. We could wake up one morning and there could be a trade deal with China. I do think it gets worse in the summer first, and therefore those rate cuts will continue to be priced in, but I don't think they will actually happen.
Where do you see, Rick, the Fed going this year?
Well, this precautionary measure or expected measure, I think, might be a little bit premature. So maybe I'm a little bit of an outlier in saying that there could be events that would cause the Fed to keep on hold. And I think bearing in mind that if they do cut, they've got to be data-driven. So if you do the deal and the economy picks up again, are you going to start hiking? I mean, in the end, you've got very low unemployment. There's no sign of inflation whatsoever.
Right.
But in the end, you're very, very late cycle. So the question is, could you raise rates after you cut them?
Okay, but could you raise rates into a recession is really the question. How quickly do you see a recession coming?
Look, unless the trade war gets substantially worse, it doesn't seem like we're in recessionary territory. If you look at the consumer momentum, sentiment is very, very strong, and that accounts for a very large percentage of the US economy. Absolutely, jobs data was disappointing. You've got other indicators of people being nervous about trade. Yeah. But we're not in recessionary territory, and yet we're treating the yield curve as if we are.